Insurance companies are completely within their legal ability if they're going to drop you or non-renew your policy, so long as they follow state regulations, which typically center around how much notice they give you. Can they call you today and tell you they're dropping you tomorrow? Typically, no. The one exception to that might be something called material misrepresentation. So remember that application you filled out when you first bought your insurance, or that I, as an agent, helped you fill out? And do you remember when I asked you if you'd ever had a bankruptcy in the last 7 years and you said no, because it had been 6.5? Unfortunately, in a nasty claim situation or a true disaster situation, the insurance company might actually investigate the answers on that application. Remember, an insurance policy is a legal contract, and that application is a part of that contract. Material misrepresentation means that you weren't fully truthful or honest about something, even if you did just forget, on that application. It then gives the company the right to deny a claim or even flat cancel your policy back to inception. That means today it's 2020. If you had a material misrep on your application in 2017, they could actually cancel that policy back to 2017 and refund you those 3 years worth of premium. Otherwise, there are very, very specific amounts of time or notice that an insurance company must give you if they're going to issue a non-renewal for your policy. It can range, depending upon circumstance, between 30 to as much as 90 days, but typically we see 45 or 60 as what most often actually happens in compliance with statute in the real world. So depending upon why you're being non-renewed, you're going to get advance notice and you're going to be given opportunity to replace coverage. The reason that the regulator, or the Office of Insurance Regulation, creates those rules is just for that reason, so that you have the lead time to get with your agent, go to market, and replace your coverage without having to do so all in the last few minutes. So the most common reasons that would cause a homeowner to be non-renewed are financially driven, such as reinsurance costs skyrocketing, or a reinsurer telling an insurance company, you've got too many homes in the, to use our zip code right here at Harry Levine Insurance, 32819 zip code, you've got to get rid of a quarter of them. Well, the insurance company is going to turn around and use some analytics and pick the 25% of their portfolio in this zip code here to issue non-renewals for. Another would be underwriting eligibility. If a company sees that homes that are over 20 years, for example, are starting to present a clear trend of claims of a certain ilk for whatever reason, they might decide that they want to purge their portfolio of that kind of risk because it's becoming too predictable and too costly. Remember, insurance ultimately is predicated upon being able to predict loss, but it should be sudden and accidental. When you start seeing a recurrent trend, there's usually something else going on there, and it's not just randomly breaking pipes. It could be a number of things, and I'm not saying it's anything nefarious, but it could be there needs to be maintenance done on a certain system at a certain age, and people have a proclivity to not do it. And that creates a situation where insurance is not designed to provide that maintenance when something fails. Insurance is designed to protect against the unforeseen when you as a homeowner have taken full pride of ownership, properly maintained your dwelling, and then something bad happens. So when they see trends like that, that's another reason. It could also be any of a number of things that go back into how the company wants to position itself, where they find themselves to be the most successful in the marketplace, etc., etc. Reinsurance is really, really one of the biggest here in Florida, and there's a thing called predictive modeling. And every year, the major reinsurers, who mostly are based, we see a lot in Bermuda, London, Germany, and believe it or not, the Minneapolis, Minnesota area here in the States, a few other places around the world, but it's a very small business community. They run these models that experts do create, and it might say that it really, really seems like there's a heightened risk in St. Lucie County. So all of a sudden, the cost to reinsure homes in St. Lucie County quintuples. So the insurance company then has to find a way to cover that reinsurance cost. And let's say they go to the state and say, our cost is going to go up by a factor of 7 because our reinsurance is going up by a factor of 5 and we still need to cover costs. And the state says, because remember, Office of Insurance Regulation has to approve most rate filings. So insurance company pricing is not arbitrary. It's reviewed and approved by the state. The state says no, the company might say, well, then we can't play in that sandbox. We can't write homes in St. Lucie County this year, or this reinsurance buy cycle, which is typically 12 months, typically runs June to June. So there are a number of reasons. It all boils down essentially to loss trends, so where they see a weakness in a portfolio. That could be for a plethora of reasons. And no, folks, it's not, oh, I had a claim, now they're gonna get rid of me. It's truly not that. It's, for some reason, we see that in homes that have a 15-year-old shingle roof or a 21-year-old plumbing system or something like that, preventative maintenance is needed. They're all breaking en masse, and it's going to harm the company's ability to pay your claim. So what they're saying is, we need to get off of these risks, we need to get them out of our portfolio because they disable us from helping other people. And in fact, and nobody likes hearing this, but in fact, sometimes you've just got to take proactive maintenance measures. It's tough on the budget, but it's part of home ownership. And there are certain things you can look at, all kinds of best practice standards, whether it's how often a water heater should be replaced, or when a home should be replumbed or rewired, or what's the expected age of your roof where it's going to need replacement. And that's a thing, there's a huge fallacy when it comes to roofing, and this is critical, and I try to help people understand this, but I hear it all the time. Well, my shingles have a 50-year warranty, so don't tell me I need a new roof after 15 or 20 years. Well, that's a 50-year workmanship warranty. That's not a 50-year, your roof is in the hot, the cold, the sun, the shade, the elements of Florida, which can often range from below freezing to over 100 degrees. That is not a wear and tear warranty. It's a workmanship warranty. The truth of the matter is, your shingle roof basically starts to die somewhere around 10 years old, no matter how good it is. And somewhere between 15 and 20, the vast majority of shingle roofs have lived out their expected lifespan and need to be replaced. Tile roofs, that number jumps to between 20 and 30 years. Same thing, I have a tile roof on my home, 50-year warranty on the tile. That roof's not gonna last 50 years. It's gonna last between 20 and 30. And that's why when people enter into home ownership, they really need to get with a team of advisors that includes an insurance agent, includes a banker, includes a financial planner, who can start to budget for these items that are gonna pop up over your experience as a homeowner.